looking good. That stock around 2.7% lower as we speak. But let's get Mangalam in to bring us some more details. Mangalam, they're still saying demand looks very weak and penciling in quite a big contraction in the margins.
Well, that's correct. So Dabur, as against what Marico or GCPL reported, their update seems slightly soft. Why do I say that? Well, because one, Dabur has the maximum exposure to the rural markets as against the others in the FMCG pack. They say that rural markets continue to remain under pressure, but they have also said, just the way Parley pointed out earlier as well, towards the latter part of the quarter, there was moderate recovery or, there was visible recovery in rural demand sentiment. However, for India, they expect a low to mid-single digit revenue growth in the quarter. Healthcare portfolio returned to positive growth. Remember, this portfolio has an adverse base effect because during the COVID times, healthcare was the one business which was doing extremely well for them. And on account of a high base, we'd seen negative growth in their healthcare business. So now that's turned positive. The F&B business continues to trend at robust levels is what the company said. Food is doing well for all FMCG companies this time around. But for Dabur, the other part is that among all the other companies, they have a fair amount of exposure to the international business as well. Now, while international business, constant currency basis, has reported decent revenue growth, there has been a lot of weakness in the currency in Turkey as well as Egypt. So on a reported basis, there would be a problem on account of currency translation. So what does all of this mean for consolidated business for Dabur? The revenue is expected to grow in low to mid-single digit growth, which is lower than what the others have reported so far. And secondly, gross margins, while they will see an improvement, quarter on quarter, EBITDA margins are likely to decline by about 200 to 250 basis points. That on account of some inflation, but more importantly, the weakness in international currency. So all these things don't bode well so much for Dabur in the third quarter. Let's see how the fourth quarter pans out. But for now, the stock at the low point of trade.
All right. Thanks so much, Mangalam, for getting us all those details. What really market has taken cognizance of from Dabur's commentary and update is that rural demand is still under pressure, and that's where the stock is down 2.5%. All right, IDBI Bank is on our radar next, and that's surging in trade today after the market regulator SEBI agreed to classify the government's post-stake sale holding as public shareholding. Remember, this is an important dispensation given by SEBI to aid this transaction and the disinvestment by the government. Abhishek Kothari joins